Hey everyone, welcome to today's video. So the HDFC stock has gone down by more than 10% in the last few days. And in today's video, I'll be discussing about the factors which has led to this crash and what I'm going to do if I'm going to buy the stock or the cutting my positions in this from my portfolio. So in today's video, I'll be discussing about three main points. Number one, the factors that has caused this crash and the factors that the media is highlighting a lot for the last couple of days. Second, I'll be doing the analysis of the stock both in the technical terms and the fundamental terms, and we'll be discussing about the positives and the negatives of the stock. And in the end, I'll be concluding this video with my predictions and what I'm going to do with the stock, if I'm cutting my positions or I'll be buying more of this particular stock. So let's get into it. So if you look at the media for the last few days, it is flooded with the news that the HDFC bank has gone down and they are giving the negative sentiments about the stock. And so this is the problem that most of the news media is highlighting, which is the elephant issue, or in other terms, the merger problem. So it has been said that because of the merger, the HDFC group has gone in huge in size, and because of this issue is coming out. And recently the Q3 results are also announced, but we'll be discussing in the fundamentals if the issue is true or not. But because of these kind of news, the sentiments are pure negative, and because of this also the HDFC stock is going down because of the panic that has caused because of these news among the common people. Let's analyze the stock both fundamentally and technically. So if we see the current price of the stock, which is around 1470, it is around the same as the stock price is as same as in January 2021. So for the last 2 to 3 years, the stock has given 0% returns as of current price. Now, this is not like it is the first time it has happened. It has happened a few times. So if you look at the period of 2007 to 2009, the stock didn't give any results. Now for the 2 to 3 years, it was again the same. And if you look at 2011 to 2012, the stock was going sideways. Similarly, in the 2013, which is end of 2012 or beginning of 2013 to 2014, again couple of years the stock was going sideways, and it has happened a few times. And again we can see that from the 2021 and 2024, the stock is again going sideways, giving 0% interest. But then also the stock has given a CAGR, or the compounded annual growth rate, of more than 20%. If we take care from 2001 till now, the stock has given more than 20% of CAGR. So this is the trend line of the HDFC stock, which was going upwards from the period of 2018 and all. And in between there was a break because of the COVID recession. But after 2021, there is a sideways rally, which is called the buyback zone. So in this particular zone, if the fundamentals of the stock is doing great, this is called the buyback zone, and this is the zone where people should buy more of this share. Now the stock is currently trading here, which is 1478. Now there can be three scenarios, which is like positive, we are having a moderate scenario, or the negative. Now if we consider the positive scenario, it is going to go back to the trend line that we have currently seen. So it can go to a price of around 1900. If we just talk about the moderate scenario, it will continue going into the sideways direction and can fluctuate anywhere between these trend lines. And if it is a negative scenario, it can go down, but which is quite unlikely because of the fundamentals of the stock is quite strong. So this is what we can predict from the technical analysis. We can predict a 30% gain from now if the situation is positive. If not, then we can expect a gain of around 14-15%, which is around the same level which was a few months back in 2023. and if it can go rally down, we can expect a negative growth of 13%. So this is what we can expect from the technical analysis. But if we look at the fundamental analysis of the stock, it is quite unlikely that the stock can go down in the long term, or in the short term anything can happen, we cannot predict exactly. But in the moderate to long term, the fundamentals of the stock is quite good, and the stock should go up. So if we look at the fundamental analysis, so the main point that I wanted to highlight is the PE ratio. So if we look closely at the PE ratio, it is available at a huge discount. So if we look here, it is approximately 30, 31. And if we look at the PE ratio at 2009, during this reason, or during the COVID period, so the stock is at a huge bargain. It is around 2009 levels. So if I show you, it is June 2009 and the PE is 2830. Similarly, now it is also 3031. So this is the, according to PE, this is the best time to buy the stock. It is available at a huge bargain. Now again, if we look at the quarterly results, so as we have seen in the technical analysis, the stock is at same level as in 2021. Now if we compare the results from 2021 to now, so revenue is going up from 11,000 to 16,000. The profit, if we look at the net profit, was 3,000, which is now 4,000, which is quite good. So this was the quarterly result. But if we look at the year results, we'll see that at the end of 2021 it was around 48,000. Now it is 60. The revenue is going up, the profits are again going up, and the compounded profit growth, it is quite positive. But if we look at the TTM, which is the trailing 12 months, now the merger has happened a few months back, but the trailing 12-month compound profit is quite positive, which is 18%, which is a green flag. And if we look at the sales growth as well, it is again 25% in the trailing 12 months. And I don't think if the merger has any negative impact on the growth of the stock, it is quite positive. If we look at the sales profits, so the another piece of news that is being highlighted is that the HDFC Bank was planning to open 1,500 new branches in 2023-24, but it was able to open 900. And I don't really feel that it is a red flag for this stock, because 900 branches in itself is quite huge. But if we look at the total branches of HDFC, it is more than 8,000 branches. So I don't think this is an issue of a concern, because if we look at some small banks, they have total branches of around 800, 900. So these kind of news are just causing negative sentiments in the market. But other than this, the fundamentals of the stock looks really good. It has plans of expanding. Okay, so let's discuss the positive points of the stock. The fundamentals analysis that we have done, it looks quite good. The revenue growth is positive. It is growing at a good pace. The profits are going at a good pace. The bank is opening its branches, and from the trailing 12 months compounded growth, we have seen that the merger has not quite affected the growth of the company. So from this, we can conclude simply that fundamentals look good, and the stock should do good in the long run. In 2024, there are mainly two trigger points which can cause a good rally in this stock. First is going to be the elections, both in the US and the India, which is going to make the stock go up. And the third point, which is going to affect the stock the most, is going to be the interest rates cut. So it is going to be a huge advantage for the banks, and HDFC to be in particular, because HDFC is quite conservative bank. So if you look at the loans that it gives, it does not give some kind of weird loans that some kind of PSUs and the PNB banks give, which can be defaulted. In this particular regard, HDFC is quite conservative, and I think that the interest rate cuts can be quite beneficial for the stock. So now the question is, if I'm going to sell the stock or not. Well, the answer is absolutely not. I'm actually planning to buy more of this stock because of the P ratio that we have seen and the discount that it is currently available at. So this is a good time to buy. And more importantly, I'll be downward averaging the stock, which is to buy at the low price. And it will be quite helpful in the long run because it is going to give good returns. The fundamentals looks good, and the major trigger points that are discussed, these are also beneficial for the stock. And in the long run, I believe it is going to do good and give better returns. So yeah, I am buying more of it rather than selling. Now, this is not a financial advice. You should do your own diligence. This is what are my opinions about the stock and what my plans about the stock. So yeah, that's it for this video. See you in the next one.